We've just been chatting a little, and Joshua's just returned from a roadshow trip to meet investors in Europe and in the US, and he tells me that in the last 5 years, the international shareholder base of KCB has gone from 5% to 40%. So there must be something that international investors like about your bank and the way you're running it. So given that 2017 was a sort of not exactly the rosiest year for financial sector performance in this country, people are obviously going along with your view that 2018 will be a better year for the banking sector. So tell us why 2018 will be a better year for the banking sector and for your institution in particular.
I mean, Christopher, I would say for us, and first, thanks for having me today, this morning. I mean, globally, what we are seeing is a lot of investors and generally partners are very key about investing here. Sometimes we are too much critical. I think Kenyans are very critical of their own land, their own space, on their own companies. But if you look at the flows into the capital markets in the last 5 years, especially last year, nearly 70% of investors were largely foreign. So they see huge changes in terms of the landscape, the technology that banks are deploying, like for ourselves, the payment space, our own digital financial services, what they call it, fintech. So they're excited about delivering of double-digit growth, despite we had an interest rate cap last year. But I would say that, in my view, what we are seeing now is a new season. I call it a much more volatile and certain environment. That the prediction we're looking for in the last decade isn't going to be there. I don't know any business today globally or any sector where you can say that you can be very clear to predict. Christopher, a few years ago, we were trying to look at the environment 5 years later. Very few people today can look at 5 years and say we can be certain. So a year, 2 years is what we are seeing able to navigate, and technology is disrupting every single business. And I listen to what is happening at Amazon, changing out what you're doing in delivering of your stocks to your stores and supermarkets, changing completely to digitizing it using robotics. We couldn't say that many years ago. So for us, what we see investors liking, and for a bank, is definitely this year will be, interest rate cap is one issue, and I can speak about that later on. But if you remove the interest rate cap, banks actually delivered, I would say, a more robust performance, because there was an impact of capping the rates. And what we did in that case is to look at our financial services. Our 80% of our customers are now on the mobile. And we have to do more. Banks are doing a lot of work, especially for us, KCB, in terms of what can you do? Creating algorithms to allow you to borrow from us, to being able to predict a customer's needs before. But I would say, Christopher, we need to go beyond just, especially if you look at majority of East Africans and Africans in general, maybe the best they interact technology is their mobile device. But that's not enough. There has to be a translation on that technology, the true value that changes their life. So banks are doing their part, is to bring in medical, education, transportation, services, and that ecosystem is then what monetizes the value of average Kenyans, wherever they are.
And what you're predicting, really, or what you're describing, what you're observing in taking place in front of our eyes, is the erosion of the limits of what a bank is and what a bank can do. Is that something that when you visit investors, say, New York, is that something that they ask you about? Do they ask you for clarity on your strategy? Do they ever worry about over-diversification? What are the kinds of questions that come up about your strategy? And how do you put your strategy into a nutshell in order to answer those concerns?
I would say that, rightly, what we see today, and this is the value that technology brings, it's not just for banking, but I speak about our experience, is the barriers for entry is becoming less and less. So today, a young startup in Silicon Valley or in Nairobi can be able to lend it to a customer without having any kind of license, for instance. Or anybody else sitting somewhere else in Tokyo can actually come into your market and lend your customers through the cloud. So for us, this is going to be for every single business. So the way we knew traditional businesses before, I think technology has changed that for sure, whether it's hospitality, whether it's transport. That's really things have changed. And I'll give you an example. I looked at New York, just to digress for a minute. New York, I look at the yellow taxis in New York, and a lot of that industry is completely being disrupted today by Uber, for instance. And in the next few years, you're not sure how that industry will. And New York was largely a yellow cab environment for taxi business. Now, my experience for us is that because already 70, 80% of our customers already are using a mobile as a device of accessing the bank, This is where our investment will be. So you will see us delivering a better channel. We are now investing in a new payment platform as a bank, which will be able to enable customers to do person-to-person transfers, enable them to do business payments, enable merchants better acquiring models, and in the process, create more transactions. So what are we attacking here today, Christopher, is more the cash payment. We are still a 95% cash economy. And you know how expensive cash is. Even with the investment and innovation with M-Pesa, we are still at 95%. So if I look at the $50 billion that we are spending every year in terms of cash, imagine if we can bring in 10% into the banking ecosystem, and that's where the disruption will come from. So that's what investors are buying from our story in our market.
And is anything at all that you do separable from technology?
I don't think, and good to see a lot of colleagues here with experience in the market. But I would say that no industry today, 90% or 95% of business is largely technology driven. I don't see anything else we do. I mean, even just you show up into the office today, we are looking at identification. And banks are learning to move away from the basic traditional aspect of identifying your clients. So one of the bigger projects we are rolling out this year is digitizing our customers' identifications either through biometrics or voice recognition. Because we are becoming less and less able to see a customer and know them, and technology is predicting 100 times better than what we could do many years ago. So I would say that if you're investing earlier, running through that, you will be able to be successful. And and our vision is to drive our business from the current 15 million customers to driving a digital bank of 100 million customers within the region where we operate today, including our business in Ethiopia. I have had very exciting conversations in Ethiopia in the last few weeks that shows that with technology, perhaps, because this has been a very closed industry.
Yeah,
yep. But with technology,
there were
perhaps.
No foreign banks operating
But
in
if you're
Ethiopia
deploying a technology engine and a platform for customers for payments, we may be able to get an option to be in a market where we have never been for the last 10 years.
90 million people.
Exactly. So this is, for me, is where we will see, and because we are closing this ecosystem, and I've been challenged and asked this question before, whether are we seeing fintechs or new startups as really the great disruptors of the financial sector? When I look at it, the bigger technology giants, we look at the big guys, the Googles, the Facebooks, the Apples. When you're looking at what they're doing and the Amazons, I think the real concern for our industry globally will be on the big giants on technology in our businesses. And not forgetting, of course, Oracle, which is seated in here with us today with Corinne. This is where the industry, I see that we are always forgetting that the larger players, with the muscle they have and the ability to deploy global skills.
Because they control the data.
They control.
So they're able to observe. I mean, the difference, of course, everybody's very worried about Facebook. We've been talking about this on the panel earlier. But everybody's very worried about Facebook and Facebook's ownership or control of their data and how that can be manipulated in various ways. But of course, Amazon, which is next in line for a lot of sort of custard pie in the face, is a place where you go when you actually want to buy something. Correct. So it's not just, we might be able to sell you something. You're already there with your buying boots on.
I mean, for us, and these are questions that we run, I call it a dual strategy for our businesses. I get asked many times, banks are going to, run away from branch. Are you going to shut down our branches? But I had a very nice experience. I went into an Amazon physical store in New York. So everyone is saying you're running away and shutting down, but Amazon, the largest retailer or distributor, is actually setting up physicals because some customers are different. There are customers who wants to go into a physical store and have an experience and run their life and buy products. And I bought an Alexa from an Amazon store, and I was trying, how does it work? And then a personal assistant is very digital. Now, in our experience as well, you'll have customers who like going into the branch, and those branches will remain. But majority today, 85% of our customers contact us from our mobile platform. So we're doubling our investments, and I believe that what is good for Kenya and what is good for this region is we have a lot of young people today with skills and capability. What we lack most is these skills. Whether you're looking at the data scientists, the engineers, the guys who can be able to create algorithms and build the models. This is why we're losing the business to startups and tech. And that's, if you look at our fintech we're creating today, most of that team is that skills. So we have to challenge ourselves in terms of how we can win that. If we don't do it, someone else will run our business.
Yeah, you spot them and then you go and buy them or co-opt them. Isn't that the big bank strategy?
Well, this is really what it is.
Now, you've mentioned it already, but let's get the elephant in the room under the spotlight. The interest rate cap is undoubtedly an issue. Many people are talking about it. It obviously affects the banking sector. It clearly affects you. One problem is that public credit crowds out private credit. Now, you proposed, I think, variable caps or a kind of transitional move away from the rigid interest rate cap to variable caps by industry sector. Now, how would that work?
I would say that the world has kind of changed. I mean, my view is kind of different from what everyone says. But I'm very confident that you need to engage the industry, or the banking sector must consider stakeholders and what the stakeholders are looking for and what our future customers' profile will be like in terms of addressing. So first, I don't agree with the cap. That's I've been very clear about. I think you can't have one regulation across the whole industry. And we're in an open market today. And it is shown it has not worked for many other reasons. But to say you have a blanket removal, it looks like it's not something we're likely to get as an industry. So what I've proposed is looking at segments or sectors. This is not an innovation that Kenya has done. We see a lot of these kind of platforms in Nigeria, for instance. There's a very specific focus on lending to agriculture in Nigeria for the last 5 to 10 years. Now, whether it's successful or not, that's a difficult question to ask today. South Africa is a different kind of model. So I was saying that you're going to look at specific sectors where you want to have catalysts, as a catalyst to drive growth in those areas. So if you link them, for instance, in Kenya to the big four agenda like housing, one of the things that has changed countries globally is housing. You create the jobs, you create opportunities. It's also the single largest asset anyway a family or a person will own. Look at Boston.
Massive
look at
societal benefits.
Absolutely. And then you can create the jobs. Now, if you look at that, then you have to have interventions about what kind of credit, what kind of pricing are you going to deliver. You look at the statistics today nationally, I think our houses probably will mean that they are maybe $100,000. A lot of our people will not be able to afford it. So my view is that it's not exactly a science. This is what we keep on arguing all the time. And if we can bring in more people into the ecosystem. So look at the mortgage market today, $1 billion. If you do, for instance, the addition of 1 million houses, you bring in between 25 and $30 billion into the market. I mean, this is 30 times. You imagine the opportunities. We talk about lacking of jobs for our young people. Our graduates and students from technical schools have nothing to do. Let them be the guys who do the job in housing. This is where I believe that as a catalyst, the industry is $30 billion today. Grow it 3 times, Christopher, and that's where the value will be for the economy.
So you've looked, obviously, at the likely impact in terms of credit growth. Correct. From removal or partial removal of the interest rate cap. So quote us some of the numbers that you feel you're happy to stick by. What would the impact be? What would be your proposed pace and breadth of removal on a sector-by-sector basis? Or where do you want to end up, and what's the impact going to be?
Before the interest rate cap, and this is an issue that is very close to... The good thing is, about this, many people, including the IMF, they have been very categorical about the impact. And I would say, so a few sectors. Housing is one area we've looked at. Agriculture is another area we look at. I mean, look at the impact for agriculture. This is 75% of majority of our workforce in our country, in Africa, are in this sector. And our total exposure to the industry is 4%. So, I mean, you can't really make a transformation in the economy by ignoring 75%. So what is the kind of story that I have always argued on this is, I better be a 10% market share for a 100 billion market than 100% for a 10 billion market.
Let's go back to what you've already touched on as well, the replacement of the iconic trillion-shilling M-Pesa platform.
Well, let me say, Christopher, that nobody, at least not us, and our goal has never been to replace anyone else. I mean, and I don't think that will be possible. I'm a great partner for M-Pesa, personally, a fantastic innovation for our country. And our vision has always been, if you start a business of replacing somebody else, I mean, you spend a lot of money. M-Pesa is a big giant. I mean, I can give you the statistics for themselves. But if I look at for the bank, we have to complement the payment model. So I'll give you some numbers to give you some background. I said earlier, total payment in the economy, $50 billion. And most of that, 95% is handled by banks. But bulk payments, very traditional models, RTGS. You ask a customer on the street, what's RTGS? Many customers won't tell you what the damn thing is, correct? Ask them about a check. My own young 18, 20-year-old haven't written a check, correct? Or we are looking at EFT payments. What they know about is an M-Pesa payment. And more, that's what M-Pesa is disrupting. So how do we make sure that we can lead? Because we are still doing 95% of our payments in the industry, but they are very archaic. And my view is that what we're investing now in our platform is to enable that to happen. Now, me or another bank or the larger bank should be able to do it, to make sure we can digitize payments in the economy, deal with the issues of ethical conduct, deal with the issues of cost. Now, if you do that, so if you think about the 5%, which is what really is digitized, M-Pesa is 97% of that 5%. And they are 2 times, 3 times all the banks. So you see the value we create for our shareholders if we truly disrupt ourselves. And in the future, I think, I'm a total believer that checks are going to disappear. And we better be the ones doing it as an industry than a younger fintech, which is coming up and say, get away from this check. I mean, why should I do it or do an RTGS? And there's a lot of difficulties industry is facing. Why I like technology is I want to pay you today. If I want to pay you on Saturday, you have a lot of difficulties. I mean, the only other way you can do it is now we have a new switch as an industry. We call it PesaLink. But the way people are having that, I want to settle anytime, 24/7, 365. It's on Saturday at 11 o'clock, 11 p.m. I want to make sure that I can settle today. The phone is the easiest way to make a settlement. And that's what our platform is actually doing.
Are there regulatory dangers to the fintech sector? I mean, what is the part of the problem, of course, with digital financial services is that they are often by their very nature transnational and outside national jurisdictions, outside the jurisdictions of central banks and securities regulators and so on.
Correct.
So how can a national regulator strike the right balance in this field?
Well, there's a lot of nervousness, and unfortunately, I'm sure the governor must have spoken about this. And he has his own views. The governor of Central Bank, Patrick Njoroge, has been very vocal about what kind of... But our regulator is very, if you ask me, quite ahead of Africa regulators, or global regulators, if I say. I mean, we will never have had M-Pesa today if our regulator wasn't thinking, how do I innovate and change the way payments are made in the ecosystem? So, yes, I see a lot of concerns. And we have a number of banks. We have a lot of people today who say they can run their enterprises, they can invest. Just the other day, when I was in Silicon Valley, one of the Kenyan small fintechs raised $75 million to lend to Kenyan customers. This fintech is not regulated by anybody, but they have 75 million. If you rank them in 40 banks, they'll be among the 40. And therefore, what I would say is we've kind of challenged our regulator to say, can you start building? So there are concerns about blockchain, for instance. There's been a lot of push in Kenya about cryptocurrencies and Bitcoins in specific. But I would say that the central bank needs to be able to work closely with the industry. So we've given some kind of discussion papers around, do they create a sandbox, a regulator sandbox, to help the whole industry and themselves a controlled model of development. That's what I believe they should do.
And will they?
Well, the regulator should be able to answer that question. But I believe it is the right way to progress, for sure. I believe so. In my view, they've been very open. I haven't seen, and there are 2 regulators, and unfortunately they were all here, and good to see the deputy governor here. The Kenyan regulator and the Rwanda regulator who are speaking today are perhaps the most innovative regulators I have seen in the markets we operate and in the continent. So if there's one who will do it, then the central bank will be the one to lead it. Okay,
it feels as though you're optimistic about this. Well, you don't worry about bad regulation or over-regulation.
I mean, as the largest bank, we haven't seen... Because it's important to... Because there is a lot of open conversation today, and I'm not speaking that because Sheila is here. But if I look at the conversation we've held with both Sheila and the governor, and remembering how we came from M-Pesa, a lot of regulators are struggling to even enable mobile payments. If you think about African regulators, they're still nervous. They're saying we can't have this happening because somehow we see a bigger risk. What we will see is that there's also a lot of caution that I will always... I mean, I've been very, very firm about what I think. Kenyans are very excited about cryptocurrencies. And we seem to forget the bigger value of blockchain or distributed ledger to settle and enable transactions to create value for us. And we all focus about buying money, buying Bitcoin. Now, as a bank, I always say, well, I don't really invest in money. I don't invest in Kenyan shillings as a currency or as an asset portfolio. But ultimately, we see that conversation, and for that, the regulator is absolutely right to provide guidance on how Bitcoins will operate if they do. But in terms of blockchain, banks, settlements, interbank settlements, we look at issues like registration of documentation we have. I think that's a conversation we are not having yet in our market, which I believe is 90% of the value of the new technology.
Well, we are going to talk a lot about that in the session in a moment, but you're on record as having declined an invitation to buy Bitcoin.
Correct.
Why? I mean, it's very popular, as you mentioned yourself, and it's on record.
You know, it was November last year. It was very exciting. It was because everyone was saying the price was going to triple. I think it was like $14,000. Yeah, and generally, I mean, my view was that it's going to come down to $10,000. So my view was that, okay, I look at the background of what exactly the assets we're investing in, and we have a very bad experience generally, Christopher, here. I mean, we're looking at what can triple returns in 3 quarters or in a month. My experience generally as a large bank, I mean, if it's a legal business to triple it in a month or 2 months, rarely do we see that happening. I mean, Charlene is there, who is my treasurer, and maybe that's the only business he runs. Correct? But I can tell you from our point of view, we didn't see that possibilities. There is value in seeing the background of the investment. And we value blockchain for the changes it can make in the way we run our enterprises. I mean, we are a multi-country enterprise. So that's what I would say the value will be for me. And if you ask me, what do I see as the future for us? So 3 main things for our business. So disrupting the payment space, which is already cash-based. That's one area. And that will perhaps deliver the next level of our growth. And then you said something else, which we didn't discuss because of lack of time, using the big data to analyze the customer's expectation. Remember, we are a bank who should be, KYC is one of the things you've spoken about for the last 100 years. But it does look like Facebook or another guy seem to have known a customer much more than us. And that's why they're delivering a lot of detailed values for them, and no wonder they have 2 billion users globally. Now, we need to be able to plug in and build the data that we have. So our new investment platform will give us a view to direct for you a loan, a mortgage, a product, a payment, a solution. If we do that ecosystem on a platform, we start building a kind of a Facebook environment, and that's where the future of the world is going to be.
Be careful what you wish for.
Thank you.
Excellent. Joshua, thank you very much indeed for coming and giving such a passionate and coherent and interesting elucidation of what the bank is doing and where the system is going generally and where you see the future. Great to have you here again. I hope we meet again soon. And now we're going to have a conversation focused entirely on those cryptocurrencies. So maybe at the end of it, you'll be convinced to buy.
Thank you.
Other cryptocurrencies are available. Thank you very much indeed. Thank you.